Good afternoon, ladies and gentlemen. Welcome to the BYOTROL results presentation. Throughout the presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of the screen. Simply press it, type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to David Traynor, CEO, and Nick Hellier, CFO of BYOTROL PLC. Good afternoon, guys.
Good afternoon. Thanks very much. Good afternoon, everybody. Thanks for your interest in our company. I understand we've got a pretty eclectic group of people on who are participating today, from existing shareholders with a great deal of knowledge in the company through to people who are newly looking at us. So we're going to try and hit everybody. If we are missing areas of detail that we don't cover, please do stick it on the Q&A and we'll do what we can to answer it either at the end of the session or later on in writing. So we're going to give you a couple of pages on the company, including on strategy. And then we're going to talk through our financial results for the year just gone, and then we'll spend some time on outlook for the business in the future. Okay. So we are an infection control and prevention company. We specialise in biocides. And biocides are chemistries and liquids and products that kill and eliminate viruses, fungi, algae, bacteria, and they take them away from places where you really don't want them. And as we go through our pitch, I'd like to try and remember sort of 3 or 4 things about the investment case of the company that I think will come through as we talk. So the first is obviously we're in a really, really attractive industry environment right now. So COVID, of course, and awareness of virus is increasing exponentially. But on top of that, there's a lot of structural change taking place in the industry that I think is an important part of the investment case and why the current team got involved in the first place. That's the first one. The second one is that I think our strategy and positioning was spot on before COVID hit, and is equally applicable to the world during COVID and post-COVID. And there are a few things about it that I'd like you to think about as we talk. And one is that we have quite high operational gearing, which means that for a very small increase in costs, we can increase sales and profits really quite substantially. So I think FinCap and its projections for this current financial year is suggesting a 10 to 15% increase in costs, but a two times increase in sales and a 6.5 times increase in EBITDA. And we'll talk about that more in detail later on. There's a fair amount of upside in business coming from organisational change. So we did an acquisition of Medimark about 2 years ago, but that only actually closed properly in February this year. And we haven't been able to complete the integration processes for obvious reasons. And I think there's upside in the business, both on the revenue side and a little bit on the cost side also. And then finally, there's a lot of optionality in the business. So we set the business up to do quite well through selling product and ingredients, and we are profitable on that basis. But you also have a patchwork of alliances and technical development agreements that get us into markets that we couldn't get into on our own, or get us into markets we could get into, but in significantly larger size. And our take is that every year, 1 or 2 of those are going to come off and deliver to the bottom line of the business. 1 or 2 of them will sort of be bumping along, but what it does do is provide potential for upside in the business at all times in addition to the product sale. Snapshot of the company. We're based in the Chester University campus in the northwest of England. That's where our labs are, and we inhabit labs of the old Shell Oil Research Centre for Europe. So we have fantastic Premier League labs up there at a decent cost to us. And we have a sales and marketing element of the business based in Sevenoaks in Kent, which is the old Medimark business that we are going to keep there. And we have 35 people in total, of which 7 are lab-based technical experts. Our CTO, a chap called Dr. Trevor Francis, who was the ex-head of home care R&D for Unilever. Here's number 2, Hugh Evans. Dr. Hugh Evans was 20 years plus R&D director at Unilever. Our head microbiologist was Unilever. Head formulator was Unilever. There's a bit of a theme going on there. We've got really, really high quality people who run our scientific and technical operation. We're active in lots of markets, but we tend to split them into 2. one we call professional, which is BYOTROL products for use in business environments and institutional environments. So that would be human and animal health, facilities management, manufacturing, and a bit of food retail too. And then the segment we call consumer, which covers BYOTROL products that end up on the hands, bodies, homes of individual consumers and their pets. And that could be B2C, B2B2C, B2B2B2C, anything that ends up the value chain with consumers. You can find us in Boots, our hand sanitizer in Boots under their brand with our logo front of pack. You can find our products in Pets at Home. So if you wish to have your dog smelling of lavender, we can provide you the shampoo that does that for them very nicely. Co-branded Pets at Home and BYOTROL. And we have various direct-to-consumer operations as well. 75% of our business is surface care, so surface sanitizers with unusual claims, unusual efficacy and high performance. And the rest is hand hygiene, particularly hand sanitizers, but also some grooming products for pets and animals too. 25% of our sales are export, including Europe, Japan, China, and US. 15 to 20% is probably Europe on average, and the rest is mostly Japan with some license deals in the States. And all of our manufacturing is outsourced. When I talk about operational gearing, one of the reasons we can get such a good throughput to the bottom line is the fact that we don't actually make anything ourselves. We use our supply chain to do that for us instead. And our commercial model is a mix of finished goods and ingredient supply, licenses and development agreements. And what we try and do in the latter is link up with big companies with lots of credibility in the markets we're going for. We like the association and the validation that those companies bring because it adds to our distribution and our brand presence. Now, strategy. So my background is investment banking and venture capital. I started BYOTROL late 2013, and when I looked at the business and its market, I looked at it as an investor would do. And the main attraction to me in the early days was the industry dynamics. Biocides is a massive market globally. It's a set of products that people and companies need. And pre-COVID, it was about $9 billion worth of chemical sales and $50 billion worth of product sales, i.e. products that had the active ingredients within it. And it was growing at 5%, and that was pre-COVID. Then I looked at the supply situation, and it's a very fragmented market. So you have some massive multinationals supplying huge tonnage of chemistries to customers around the world, but then you follow the value chain through and you get all the way to sole traders who are doing small cleaning businesses. And so I thought, well, that's interesting, big fragmentation. But the thing that really got me going was the regulatory situation. So biocides can cause damage in the environment and to individuals and living things if used incorrectly. So regulators were increasingly looking at authorizing the chemistries and the products that those chemistries are based on in given markets. The US has been doing it for some time. If you want to make biocidal claims in US public markets, you normally have to get EPA or FDA approval. European Union started doing the same thing about 5 to 10 years ago, where they were first of all looking at the active ingredients, approving or disproving them, and then looking at the products that those active ingredients went into. And many chemistries that would have been used historically have been disallowed in Europe. But I thought, well, that's interesting because if you've got big demand, fragmented supply, and increasing regulatory presence causing weak competitors disappear, from an industry structural perspective, that is quite a good place to be and has led to all sorts of consolidation and change around in the competitive environment. And then, of course, COVID happened, and you suddenly had a massive sort of input or increase in demand, which meant those facts I'm talking about suddenly became even more powerful. So you put those things together, and then the strategy we put in place was actually a pretty simple thing to do because it's a very similar set of circumstances to what has led to the growth of pharmaceutical and the pesticide market over the last 20, 30 years. And you look at the winners in those markets, the winners are those that base their business on strong science, high ethics, regulatory approval, and high performance chemistries. So that's what we did. We set about developing chemistries that ticked all those boxes, but they were focused on the infection prevention and control market in human and animal health, consumer and facilities management and janitorial. And in choosing which chemistries we're going to be in, we tend to look for chemistry in that box in the bottom left-hand corner there. So we look for chemistries that are disruptive in some way, that are regulatory approved, and of course we have satisfied ourselves are going to be valuable. So, for instance, we manufacture alcohol. We have manufactured alcohol-free hand sanitizers. 20% of the population have skin that is intolerant to alcohol, and as a result, either do not use it or use it under duress. So we've come up with a chemistry that works just as well as alcohol, is just as efficacious, can be used in the NHS, but doesn't have the disbenefits of alcohol, and has better health and safety claims attached to it as well. We have long-lasting surface sanitizers that carry on working when they're dry, so you have cost-benefit claims in the business world, and you have consumer claims linked to long-lasting protection for you and your family. We have chemistries that emit certain forms of biocide that are disallowed in certain markets. So, for instance, there's a very active use chemical called quaternary ammonium compounds that is heavily used in the food industry, but that is limited in use because people are worried that it's getting into the food chain. So we have biocides that do not have any quats in them. And the trick is to find chemistries that work to a very high level, that are going to be regulatory approved, but actually don't have any disbenefits of some of the historical chemicals that are being used. So then you look at how the business has grown since we started, and I frequently get asked about BYOTROL 10, 15 years ago, before the current team in place, and they had a business that floated with a single formulation and that struggled to get that formulation to work in all the various formats they were trying to get it to work into, and that struggled to deliver to the promise that shareholders had. So when we took over late 2013, there was a bit of work to do, and we stripped the business down to 18 people. We put 8 of those to work in the labs to get to the level of chemistry that we thought was going to be fit for purpose, the markets we were going to get into and get regulatory approval. And while we were working through those chemistries, we made our money by long-term alliances and development deals with big customers. So over that time period from 2015 through to 17-18, we were doing deals with Kimberly-Clark, Peace Cousins, a small deal with Unilever, and other companies of that name, effectively acting as an outsourced R&D function for them and taking some degree of royalty from whatever work we did for them. And that actually kept the business moving along and financed the development of chemistries that we needed. So if you look at the graph there, the blue chunk of revenue in the years, the grey chunk is gross profit, the green is EBITDA, and the grey line is the percentage of revenue from one-off deals, i.e. technical development deals, alliances, licenses, whatever, as a proportion of revenue. So if you can see that through until about 2018, we were financing the business through large deals. I quite like that because it proved that we had good chemistry and people trusted in our products. But then we decided in 2018-19 we needed to start selling more product to create a more stable business. So that led to the acquisition of Medimark, which was a very impressive sales-led organisation in Kent in human and animal health, but it was quite short of new technologies. So you put the two things together and you have better chemistries available to more people and better distributed with better sales and marketing. And then you can see since then, as we have brought the two companies together, obviously the percent of revenue from one-offs has declined, and actually the more fundamental things about making money through sales and gross profits and EBITDA has increased substantially to the point where in 2021 the expectations for FinCap are really quite high. Now, I like the mix of product sale and technical development deals and license because I think the latter can get us to markets we can't do on our own. And I'll talk more about that in a second. But also, once you do get a license in place, you make 100% gross margin from the transaction, and it can look it goes straight to the bottom line, and it gets you some profile as well. So we will carry on doing that as we grow the product side of the business. And I'm thinking between 5 and 10% of revenue should be license based each year. We also, because we wish to be a very strongly scientific led company, still spend money on research and development, mostly development, but there's a bit of research as well. Our biggest and most exciting area of R&D right now is seaweed, which is where we have patented a technology and had government grant support for that technology to develop natural active ingredients, natural sustainable active ingredients for use in our products, but also potentially adjacent markets as well. So that's a very brief run through the history and structure of the business. I thought I'd pass across to Nick now to talk about our financials for the year just gone, and hopefully see some of those themes I was talking about as he talks. Nick.
Thanks, David. So if we look at the March 2020 results, the first thing to observe is that they're 6 months old. So the world has changed a lot since then. So in terms of informing us as to what our world looks like now, they're clearly not very helpful. In fact, to quote the first line of the FinCap research, BYOTROL's financial year 2020 full year results are inconsequential, which is obviously a little bit harsh on all the people who spend a lot of time putting them together, but ultimately is a fair comment given where we are now. But let's just look at them as clearly they do inform where we are now in terms of the background of the business. And further complication is that 2020 is quite hard to compare to 2019, not least of which in 2019 we only had 7 months of Medimark. As David mentioned, we bought that back in August 2018, so there were 7 months of its sales and profits in the 2019 numbers. Clearly in 2020 there were 12 months. And also there was a very large and obviously publicized at the time sale of IP, which once we transitioned to IFRS 15, and I'll come back to IFRS 15 briefly in a minute, meant that in 2019 we recorded a income for that of £1.9 million in round numbers, which obviously that was an IP sale. There was no cost of sale associated with that, so that was went straight to the bottom line. If you adjust for all of that, the 2020 numbers were ahead of where they were in 2019, so that was good. So, but as you can see, the mix of sales were very different. This year, as I said, I'd come back to IFRS 15. You can see the royalty and licensing number in there of 777. How that works, just to give people who aren't necessarily aware a quick bit of background. IFRS 15, the new, well, not so new, came in 2018, revenue recognition standard. What it means is that you recognize revenue when you've delivered on your promise to the customer. Now, clearly what that promise is and how you deliver it varies hugely by industry. And in our case, when we sell a product, a litre of a particular product to a customer, we've delivered on that promise when we have literally delivered the product to their doorstep. That's fine, or made it available for collection if that's what the deal is. That's easy. Anyone can do that. In terms of a licensing deal, it's a lot more complicated. And broadly speaking, how ours work is that we recognize the revenue which is implicit in the contract overall, which may be a long-term contract, might be several years long. And what we do is we say, if there's a whole bunch of payments, annual payments in that contract, we recognize those as soon as we've done what we've said we're going to do, which in this case is simply transferring over the technology so they can use it. So that's recognized all up front. So what that means is that we recognize, in certain cases, revenue upfront for licensing deals. That generates long-term debtors because we're being paid over a number of years. The detail of that is all in the results, and there's a little bit of color on the profile of those payments in the financial review section. So just bear that in mind when you're looking at our results. Although for this year it was only just under £800,000 worth of income. Looking at the balance sheet, you can see how that's strengthened since the previous year. Intangible assets, they are mostly from the acquisition of Medimark because you fair value those when you acquire them, although underlying that is actually quite a lot of IP that we've developed ourselves, which is in there at its development cost. Deferred tax, that's a new one for us. We didn't used to recognize deferred tax, despite the fact that long before David and I's time, various tax losses of substantial amount had built up in the business, but we never recognized them because we were never sure of the longer term profitability of the business. So we've recognized that this year, which is obviously the board's assessment as supported by the auditors of our longer term profitability coming in. Trade receivables, as I say, long term, that 714 figure there, that reflects the value of the contracts that we've already written and recognized to us in cash terms in future years. Quick note on the inventories. I don't think David mentioned, but clearly March 2020 numbers, they reflect probably about a month's worth of coronavirus impact, possibly a little bit more in certain markets, but broadly speaking, a month's worth. So when we started supplying to people in the very early days of the pandemic, reflected in these results, we were doing it out of stock. So you can see that the stock in 2019 was £400,000 in round numbers and was reduced from that figure in 2020. Now, Now we've gone back to more than normal. Our stock figure is a lot higher, and some of our cash that we are generating, and I'll come back to cash generation in a minute, very positive cash flow, is being reinvested in stock. So that stock figure, if you took a balance sheet today, would be significantly higher than that. Likewise, trade and other receivables, the trade receivables figure has gone up, both on the back of normal revenue and also the fact that we did a super normal amount of revenue in the March period. Cash, cash went down in the year, but that figure is slightly misleading because, somewhat to our annoyance, we were due to get a figure of £300,000 from the IP deal, which is in the 2019 figures, on the 30th of March, and of course it arrived on the 1st of April, which meant that it wasn't in cash, it was in debtors. So you could put a pro forma number of that of £2 million, which obviously reflects better the underlying situation. We don't have significant borrowings. The 296 you see there is the trade facility which came with the Medimark business. As you'd expect, that is now pretty much paid down to zero. We don't need to use that anymore. That was a historic legacy from the Medimark days. That's not in use anymore. And more importantly, there's an important zero there, which is in the financial liabilities line. The 2019 figure is 817,000. That was the estimated value of what we'd be paying out to Medimark. Now, as we've flagged elsewhere, we settled the Medimark deal in, I think it was actually late January of this year, part in cash and part in shares. So that's all now done and dusted. We owe no further money to the vendors of Medimark, and that business is now fully integrated with the overall BYOTROL group. So that's the good news. Nothing else to pay out on BYOTROL. And as I think we've said somewhere, if you take the total payments we made to the vendors of Medimark, I think that added up to about £2.8 million, which is not bad going for a business which last year, as in this reported year, made EBITDA of round numbers £500,000 and will probably contribute a fair bit more than that this year. So those are the financials. I'll hand back to David, and obviously we'll come back for questions as and when.
Okay, thanks, Nick. Now, looking at a bit more detail in the individual business units of the company. So professional, remember, is BYOTROL products for use in business environments. Most of our effort to the last financial year went into that business. It was Medimark's core skill. It was where we were making, we could achieve larger sales in the current environment. And you can see some of the trends I was talking about there. So product sale, increased substantially during the year. We did achieve some royalty income from various deals over the course of the year as well. And the total sales and gross profit lines, a big improvement on the previous year, with 12 months of Medimark in there for the first time. Our professional business now being run by Rick Heyman of Medimark, doing an excellent job for us. And I'm delighted that I've now got strong leadership there that's taken the business forward in a key part of our business. But in the same time as selling as much as we can, we've also been trying to improve the quality of the business over the last year or so, and that has been including since year end. So one of the things is we're transitioning across from traditional BYOTROL product area, which was food related. We're moving from that to more clinical level performance. When I say clinical level, I don't mean clinically approved. I mean high performance chemistry in community healthcare. So that would be GPs, dentists, those sorts of areas, but not hospitals, because infrastructure costs to get into that are too high for us. Our current level development in animal and human care, facilities management, and similar areas. We're rationalising our SKUs. We are upgrading all of our formulations. So we're injecting, I think, some better chemistries into Medimark's core business that have slightly better performance characteristics, good price points, and some interesting new claims. And we are pushing very hard on the Inventories alcohol-free hand sanitizers as well, which has clearly been boosted by the pandemic since March of this year. But for markets that we can't get into ourselves directly, we have been carrying on doing licenses. So in this calendar year, we signed a license with SC Johnson Professional Limited, which is the professional arm of SC Johnson, the company recognised and bought Deb Hygiene in the UK a couple of years back. We now supply them with all their alcohol-free hand sanitizers they put into hospitals. So if nurses don't want to use, or cleaners don't want to use alcohol hand sanitizers, there will be a dispenser next to it they can use alcohol-free instead, that we think will improve compliance and use of hand sanitisation stations in those hospitals. And we did a deal with Tristel PLC, excellent company, at the end of the financial year 2020, which is where we're supplying non-chlorine dioxide, which is Tristel's core area, chemistries for surface care, that they are putting into dispensers in UK hospitals. Now, I like both those deals because we wouldn't do that on our own because we can't afford, we don't have the size of company, we don't have logistics to put in place dispensers and mechanisms and service them properly and train the staff in the way that these two companies can. So I get a royalty from whatever they sell with some good technology that we support without having the hard work to do the level of sales that they do. And I think it adds very nicely to our bottom line. So that's professional. And then moving on to consumer. So consumer also shows similar trends to the ones I've talked about, but the numbers for the comparative numbers for this last financial year are very heavily skewed by the IP sale that Nick was talking about earlier on. So if you look at the product sale, we did increase product sale in the business, less royalty income, but the IP sale meant that 2019 was a significantly better year than 2020 in bottom line numbers, but actually the business was improving with only 1.5 people actually involved in that business. And consumer is somewhere an area we'll focus on a lot more in the near future. It was a steady performance. We did a couple of deals. So one of the best deal we did was probably with Swan and Tower Electrical Appliances, really good brand association for us. So when you buy one of their carpet cleaners or cleaning products, now you'll have a little pack of a BYOTROL product in there as a liquid that you put in the machine to give you some interesting claims potential. And we expanded our relationship with Boots in supplying with hand sanitizers. So if you go into Boots and buy their own brand antiviral hand foam, that is our product, and you will see our logo on the packet. Now, unfortunately, we are in the healthcare aisle because they have a different healthcare buyer to a normal consumer goods buyer. So we're stuck away in a corner, but it's doing very nicely for us. And I really like the validation that the association with Boots gives, and I expect we'll be expanding that relationship in the very near future. Now, things that don't appear in the numbers, though, are two big deals, and I've seen a couple of questions coming on this already, that we had in place that I expect to start bearing some fruit really quite soon. So the first is a relationship we have with Solvay. Solvay, massive multinational chemical company with whom we developed a long-lasting antibacterial, antiviral surface sanitizer. So you spray or wipe it onto the surface, it kills bugs dead on contact, and it keeps the surface free from bugs for 24 hours, even with multiple touch. So it's a real life claim that works to the claims promise in normal human usage. And we developed it for them. We set about jointly marketing it with them around the world, made some progress, improved the technology. And then 2 years ago, we realized that actually it was a big project with big potential, and it would be much better off sitting in the labs in Solvay where they could develop into a global product. The deal we did with them was they paid us a lump sum for the intellectual property that we developed. They gave us usage rights over it. So anything they develop in this sphere, we can brand BYOTROL and sell it in our own right. But we also have an ongoing commission. Some people call it royalty. It's actually more of a commission on the sales that they achieve globally. And it's a very small commission in percent terms, but Solvay is a global company with a global P&L looking for global success, talking to global customers. And we went a bit quiet on it as Solvay fine-tuned the technology. You may have seen that they launched the technology officially last week. If you Google Solvay and Actizone, which is the brand, I think you'll see from that there's an awful lot of resource going into it. And I expect that we're going to make a decent financial return for it. I can't say how much, it's all confidential on the deal that we did. But again, if you just look at the amount of effort going into it, look at the size of the company, look at the company they deal with, I think you'll see that it could be very beneficial for us indeed. So that's Solvay Actizone. I think there will be Actizone products on shelves somewhere this calendar year. I expect that we, BYOTROL, will be making proper money from it in next financial year rather than this. So there may be some small return this financial year, and it's not in our numbers so far. The second deal was for a surface technology we developed in the US. And in the US, very heavily regulated market, if you want to make long-lasting germ kill claims, there you need to pass EPA tests that are very, very difficult to pass. And when we passed the test a couple of years ago, we were the only company that could make a long-lasting germ kill claim in the US. And now I believe we are one of two companies. The other one is Procter & Gamble, via a relationship they have with Microban. We set about trying to sell it ourselves in the States. We had a big trial going on with Target supermarket, and we found that actually the amount of money we had to put in to make it work was just way above the amount of money that we were willing to risk for the potential rewards. So what we did is we licensed out that technology to a group of investors and market professionals called Integrated Resources. We did that deal at the beginning of this financial year, and they're now setting up manufacturing for it and starting to do deals. We have a license, we made license fee in it, we get ongoing royalty. And I have to say that I think it's a better risk reward for the company going at it that way than doing it ourselves. I would rather focus on Europe and Asia. I don't have any particular news on that yet, but I would hope I have news on that within the next 12 months. And again, going back to my point on optionality, it's another little deal that we have, or it's another deal that we have that I think will bring upside into the business alongside Solvay and SC Johnson and Tristan and all these other names. Okay, that's what I was going to say on the current business. I'll say on the year so far. Now turning to outlook, which obviously is a very hot topic at the moment. It's clear to us that the world has changed with COVID. You probably have seen the behaviours of yourself and your family and children and others changing around hand washing and sanitising. You probably find that your children know what a virus is now, where they wouldn't have done before. And within the consumer world, it is a new world that is going to lead to lots of money being made by participants in the market. In the business world, you're probably seeing employers changing their approach to sanitising workplaces. And part of that is because they're now taking a legal risk for maintaining the health and well-being of their various stakeholders, their customers, employees, and so on and so forth. So we think that the world has changed, and it has changed for good. It might not be at the current level that we are right now, but it's going to be significantly above what we had seen pre-COVID. And we are right in the epicenter of the companies that are benefiting from that environment business-wise. And you can see that is being reflected in our sales so far this year and the projections that FinCap has been putting out on us. So in the table you see there, those are the numbers we reported for the year to March 2020. And in the middle there are the numbers that FinCap are currently putting out for us. So 11.5 million quid in sales is their projection, OPEX of 3.3 million quid, and EBITDA adjusted, and it's adjusted for pre-share-based payments and pre-exceptionals, is 1,750 compared to the just around 300 grand that we publicised before. So there you see my operational gearing point, a very small increase in costs, substantial increase in sales and profits. And the latest forecast we put out is based on is only on 6 months trading so far. So our first guidance of 1.1, then it was 1.5, and now it's 1.75 million quid. And I think obviously we're working hard to see if we can better that over the course of the year. So those are financial numbers. I'm not going to talk very much more about financial numbers because obviously there'll be forward-looking. I get risk of talking about forward-looking statements and getting into the details of commercial arrangements. But what I would say is financially things are going very, very well for us. And actually the challenge is how do we turn that into similar levels of profitability, a better profitability in the future, and the board is very focused on that. So that's the those are numbers. Then you look at the more qualitative outlook for the year to 2021, and obviously I've talked about the demand situation and the supply situation, and this regulatory situation won't change. So the regulatory squeeze that got me attracted to the business in the first place is still very much in place, and it's still impacting on the industry dynamics. I think there are some competitors right now that you'll see very high profile in the markets that are currently making product claims that I do not think will stand scrutiny by the regulators. And there's already one company, for instance, has had to withdraw an up to 30 days antiviral claim from the market because they can't justify it, and they're being looked at by trading standards. And I think there's going to be more of that. I think frustratingly, some of those companies will make very good money in the short term, But our positioning again is similar to the pharma world. That is, the long-term winners are those that stick to high science, high ethics, and future-proofing regulation. That's very much where we sit. So we do not make up to 30-day long-lasting antibacterial claims, for instance, because we do not think that they are appropriate, and we don't think they'll be supported by regulators over time. So the industry dynamics are still very, very much in our favour, while the demand just keeps on going up and up and up in more and more markets. The supply chain is now functioning well. Initially, it was problematic as various national borders closed down. So, for instance, all the foam dispensers for our hand sanitizer were made in China. And when China went into lockdown, suddenly there's a big shortage of foam dispenser heads when no other company is able to make it the speed that we want. Most of those seem to be clearing up. Raw materials seem to be increasingly available. And the reason we have been stocking up recently is because we can, because the materials are there, and also we're protecting ourselves against future lockdowns in case of there being a second wave. So interesting enough, our order book has gone from about 2 million quid at peak down to just over 1 million quid. But we like that because it means we can then satisfy customer orders very much more quickly than we could before, and people aren't having to say, yes, I'll have whatever you have, even if it's in 5 months' time. So supply chains are functioning well. We are opening a new specialist virology lab in Chester right now. This is a big thing for us. We figure that viruses are effectively the new germs in consumers' minds and business minds, and we are absolutely determined to make sure that we are leading edge of work on viruses, and our products are making fully justified claims around viruses. And so that's opening up very, very shortly. Very excited about that. And then the other area of focus is bringing Medimark into the business in a way that is more efficient than we currently are. So we're doing very nicely already. I think Rick is doing a very good job, but there's more that we can do, and that takes sitting down with each other more than we've been able to do so far. But even in the fairly slow way we're going at it, I see all sorts of upsides, for instance, on logistics and supply chain and simple things like communications across the company and so on and so forth, as well as the obvious revenue synergies. And then finally, we're growing in so many different markets in so many different ways at the moment and selling as much as we can, that there's a danger that we lose focus on markets that are going to be the best for us. So there's a board process taking place right now where we're looking at the 3 or 4 markets where we think we can really, really make a difference with our technologies, and where our competitive advantage is protectable in those markets, and then looking at offloading or monetizing or alliance or licensing or whatever the markets we can't get to quite so well, or where the risk reward isn't quite as good. So you put all those things together, we're in a really good place at the moment, and I think we will carry on benefiting for quite some time the current situation, because I think the world is very new in terms of consumer behaviours and business demand for our types of products. I think we're going to do very well for the long term as well, and hopefully you can see that in the numbers we put together so far.
Fantastic. Thank you very much. Thank you, David. Thank you, Nick, very much for updating investors. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Lastly, before I hand back to David and Nick, I'd like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you will be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. David and Nick, perhaps before we look at the questions submitted during today's presentation, we had a number of questions pre-submitted by investors. If you're happy, I'll just quickly address some of these at you, if that's okay. The first one we've got here, what do you see as the greatest risk to the business moving forward, and what do you see as the greatest opportunity?
Well, I think the opportunity is easy. It's just making the best of an extraordinary demand environment that we have. And we have a board process going on where I think we're going to be operating in fewer market segments than we currently are, with fewer formulations, but doing it better marketing strategy, better proposition development, and better sort of noise around the business than we've been able to do to date. The biggest challenge, honestly, is execution risk. That is not making those choices quickly enough and not putting enough money to work to take full advantage of the opportunities that we face. Because I could see us growing in so many different markets, and we're selling products to so many different markets. I worry that is going to lead to dilution of the core opportunities. So obviously we face all normal commercial risks on supply chain and product recalls and all those things, and quality, and we manage those quite well. I think it is execution risk, and I lie in bed thinking, God, we mustn't muck this up. I mean, this is a really big opportunity, and this is a time to do extraordinarily well, make a difference in the world, generate some products that are good for the world and the environment, that are good for people, but also make stakeholders a very good return as we go.
Thank you very much indeed. The next one we've got here, what do you think your where do you think your distributors are at the moment vis-a-vis their inventory and ordering cycles?
Next slide, this one.
Yep.
Okay. Well, historically, we sold most of our products from stock, as Nick was saying. So stock normally about 200 to 400 grand. Obviously, that changed when COVID happened, and we were doing an awful lot of forward ordering as people were basically panic buying to start with to ensure that their premises and themselves were being protected properly. And then post the immediate panic, and as supply chains eased, we saw distributors stocking up quite a lot in preparation for a second wave. I would say that a month or so of working through some of that stock during the summer lull and a little bit more confidence around what's happening in COVID, that now seems to be moving back again to people stocking up as publicity gets louder about a potential second wave, but also a realization, I think this isn't going to go away for some time, and that actually there's likelihood that something may well follow COVID, some other virus at some stage in the future as well, and they can't be afforded to be seen out of stock. Again, I think there's also some signs that people are stocking up in expectation of potential of a hard Brexit, both stocking up in ingredients but also products. But I think that stock holdings are probably going to be larger across the whole industry going forward, and certainly our stock at level is about £1 million now. I think because there's an expectation that people can't afford to get caught short in the way they did when COVID first hit.
It's probably worth noting as well that dynamic affects our order book, and when we report the order book, and we probably need to be a little bit clearer on this in the future in terms of where we are in that cycle. I think cycle is possibly not the right word, but in the early days, clearly the only way that we could commit to serving customers was if they put in multi-month orders, because that's how we would then get the product from our supply chain. That did lessen off. Whether it comes back with second wave, all that sort of good stuff remains to be seen. But now it's a bit more regular, and as I pointed out and David's pointed out, we have built a stock position such that we can service people from stock more easily. So the reported order book figures aren't necessarily from month to month totally comparable, but as I say, we'll probably give a little bit more clarity on that when we report those in future, just to give some color as to the dynamics of how that the supply chain versus the customer end is working.
Thank you very much, Nick. The last pre-submitted question we have before we move on to the ones through the live session, your international revenues seem to vary a great deal year by country. Can you please talk about any strategy / plans to grow overseas?
Oh, good question. Yes, the revenues have gone up and down quite a lot. That's partly because they get skewed by licenses and technical development deals, and the payer of the check to us has been in a variety of different countries over time. Most of our revenue, most of our product sale is in the UK, with a little bit in Europe and a little bit in Asia, especially in Japan. And that's predominantly because we come from quite a small base, and we try and grow locally. It's easier to grow locally with good products than it is to grow internationally. Now, having said that, a core plank of the strategy is to start moving our products into markets where we know we can perform to the levels required in those markets. We have some good, interesting claims, but also where we're going to pass regulator scrutiny. So, for instance, we like the European Union's approach to regulation of biocides because it's going to be standardised across the whole of Europe. And we have structured all our products so they will be able to they will be sellable in Europe as well as the UK. I view that as a huge opportunity for the business across all our core segments. And now the work needs to start on sort of getting our export and manufacturing processes correct to take full advantage of that. I would say internationally, so the US is a massive market where you can make huge returns, but the risk profile is quite high as well. So risk in terms of having to spend lots of cash with no guarantee of return. But secondly, if you get it wrong, in the chemical world, the litigation side of things is significantly is a significant thing that the board has to think about. And while we don't have any particular concerns on it, I just get a bit put off by the combination of all those things and it being a long, long way away for us. So the US is probably my least favorite market for us to sell directly into, although I like the idea of using partners and licenses to go into the market on our behalf. Europe, I really like. It's the Goldilocks market for us because we have chemistries that are approved under the new European regulations when they finally come into place in 2 or 3 years' time. It's transitioning across there now. I think we'll do really well. And then Asia is a patchwork of different regulatory environments. So very, very heavily regulated in Japan, less so in other Asian countries. But the environment for bacteria and viruses is actually conducive to people taking a big focus on hygiene and sanitization. So I think UK and Europe first of all, then Asia, particularly Japan, where we do very nicely already, and then I think the States. Then you'll be able to start seeing a bit more regularity to the numbers we report on a geographical basis.
That's great. Thank you very much, David. I know I haven't given you guys, you've had quite a few questions through, and some of which you've already covered off just in the questions and the presentation. Perhaps if I could just hand back to you, if you could just have a scan down at some of the questions and where appropriate, if you could just read them out and give your answers, that'd be much appreciated.
Shall I, David, I'll pick up a couple of those to give you a bit of a break from talking. So in no particular order, Trevor's asking, your current year's first half has just finished today. Do you intend to update the market on first half trading in the near future? The plan would be to put out the interims sometime in December, hopefully early December, if not late November, there or thereabouts. And to the extent that anything changes from current guidance, we would put something out. So that it depends on how events turn out. I'll say no more than that. There was one other there from Michael, which was, can you please tell if you intend to pay a dividend in the near future? You've probably picked up in the results, there is a commentary about some technical processes we want to put in place at the forthcoming AGM, which are, I won't bore people with the details, but in essence, it's to reclassify the share capital. At the moment, we have negative retained earnings at the topco level, which means that we can't technically pay a dividend. It would be illegal. Now, that can be solved by some rearrangement under a legal process of basically transferring share premium to retained earnings. Once that's done, we will be able to pay a dividend. When and if we pay that dividend is obviously a different debate. Now, clearly, to the extent we will be cash generative in the future, we will look to do something with that cash, and we will look at the opportunities available to us at the time, whether that's reinvestment in the company or whether it's paying out of the dividends. We will have to see. Now, we haven't got to that point yet. We're just putting in place the mechanics to do it. But clearly, that's the important first step. It gives us that option, which at the moment we don't have. And I'm just looking if there are any more I could pick up rather than David, but I don't think so. And I certainly won't touch the one about our products curing rashes. That's definitely one for a qualified medical practitioner, not me. But David, back to you in that case.
Yeah, Patrick M., I'm pleased to hear that your hand sanitizer has cleared up your rash. We get a lot of emails like that. I mean, it's used by an awful lot of football teams and sky cycling teams and sports teams, and we supplied the Rio Olympic team with all sorts of products, and they had the lowest instance of flu and illness in the run-up to Olympics they've ever had. Now, we're not allowed to publicise that because we don't pay huge promotional fees to the Olympic organisation at the time, but we have all sorts of elite sports teams using our products right now, and we will be making more use of that in some way in the future. So just going through these, I've been asked about competitive landscape from Harry and fogging technology promising 30-day virus-free results. Well, this goes back to our wish to stay within the regulatory rules and not to stretch the science too far. I mean, we tested those products are making those sorts of claims. Most of them, in fact, up to 30-day claims. Similar going to a shop where it has up to 95% reduction on goods, and you find out there's only 1p reduction in those goods. And we can't make the technology work to the claims that people are promoting. And our expectation is that regulators will go after them in due course. And you're already seeing some trading standards moves towards that. But I don't know much more about the individual products. I leave that for the other companies to answer themselves. Solvo we covered, dividend we covered. Yes, Julian H., can you say something about BYOTROL and the possible post-COVID future in which vaccines have controlled COVID? Right, good question. We don't hate bacteria and viruses. We just want to make sure that they are managed in a controlled way in places where you don't want them. So 98% of bacteria are actually good in the environment. There's only small percentages that are unhelpful. So as an example where we approach that, our seaweed formulation, we believe, is antiviral, but not at all antibacterial. So if you believe that most vaccines are bad for human beings, and I think a couple of sections, but not many, whereas most bacteria are good, and you have a product that is very antiviral but not antibacterial, you can see that has potential claims in all sorts of interesting areas outside of our core business, such as animal foodstuffs and so on and so forth. So what we're trying to do is to take a scientifically led, regulatory approved, but nuanced approach to the living environment, and to, I think we'll increasingly start talking about things in terms of risk reward. So what is the risk from getting this wrong? And what is the cost to ensure you don't get it wrong? And I think that's one of the ways the industry is going to move in the future. So whether or not vaccines will ever get controlled completely, I doubt very much. I think COVID will get controlled, but I think there'll be something along at some stage in the future that will keep the industry ticking ahead very nicely. Pricing power and current market conditions. Yes, there is some pricing power. Yes, there is. We have been quite cautious because we're trying to put up long-term relationships with our distributors, and we don't want to be seen to be price gouging in any way. So what we do is when we have ingredient prices going up or packaging prices go up, obviously we push those prices through to our customers, but we try and do it in as a fair way as possible. Now, you may see some of our products selling at premium pricing online here or there. We don't have a lot of control over that because those products tend to get bought from us and then are resold. I think as the regulation bites and as understanding of the risk reward around hygiene and getting it wrong is more understood in the general population and by employers, I think that we should be able to premiumize our products because I think they'll be better suited to environments more sensitive to difficult things that they can cause than our competitors' products. But let's see, that's one of our main targets. How will Integrated Resources Inc. market BYOTROL 24 in the USA? That's from Mark G. They're in the middle of doing it right now. They're looking at manufacturing first and foremost. They want to, before they make a big noise about the product, they are trying to secure manufacturing because no one wants to get a lot of news flowing when you can't actually then supply the product to people, because then apparently subconsciously your lack of supply becomes associated negatively with your product brand. So the marketeers tell me. So the first thing is, can you get the manufacturing in place? Can you get the ingredients in place? And they're making good progress on that. They're talking to all sorts of people about potential deals, but I don't really have much visibility on it because it's now their business. They have to pay us guaranteed minimums on our license every year, plus an upside when they get above a certain level. But really, it's up to them to do that, and we are supporting whatever we can. And I would say they're a fairly early stage. The prognosis is quite good, and they seem to be a pretty capable team to me in general. So, Mark G, you seem to take a disturbingly cavalier approach to delivering audited accounts. Why has this been so problematic? Nick, maybe you could deal with that. Thanks, David.
Let me put it in context. Firstly, the difficulties we had last year, I think, were well publicised. We all knew about that. Let's take a step back. The audit profession generally has got massively more risk averse in the light of their own well publicised failures. I saw Deloitte's were fined 50 million quid for getting autonomy wrong not so long ago, and there have been a whole stream of not quite so large but certainly painful similar events in recent years. And so they're tightening up their own act, and the FRC, which is the auditor's regulatory body, are very much on their case. And the FRC do sort of random audits of anyone's audit. Could be ours, could be someone else's, not because they think there's anything wrong, but because they're just doing random audits. And every last I needs to be dotted and every last T needs to be crossed. Now, that's all fine. And you might ask, well, hang on, you've had 6 months to do it. Why not? Bit of background to that. Firstly, we changed our auditors in, I think March was when we changed. We stuck with the previous ones for one particular reason, which was that they were involved in the audit of Medimark. Now, we wouldn't normally audit Medimark as a separate company, but because the sale and purchase agreement under which we bought it required an audit for that year, we had to have that done. And that was a time-consuming and costly process. And until it was resolved, and obviously the ultimate outturn of that was, as you saw, the settlement with the vendors of Medimark, until that was resolved, we couldn't change the auditors. So the audit change was later than we would have otherwise wanted it. So Crow came in, and obviously by the time they had come in, coronavirus had happened, so they had to do everything remotely. And in fact, I'm not even sure if they've ever been to our, other than in the pitching process, actually attended our office in person. Now, what that meant was that clearly processes were more difficult. Everything had to be done remotely. There was a lot of inefficiency that way. And as part of my own improvement and upskilling of the finance function, I hired a new financial controller who, by the time she'd given in her notice and joined the company, couldn't join till mid-May, I think, which again caused delays because obviously she had to get on board remotely. She couldn't go into the office. So the combination of all those things meant that we were behind where we wanted to be. And frankly, Crow were taking a very, and understandably in the circumstances, very pedantic view of life in terms of ticking every last box. And that just hasn't been done yet. And that's, is it where I want to be? No, it isn't. Will we try and do a lot better next year? Yes, we will. It's technical factors which are outside actually both our and Crow's control, and we're hoping to have a resolution of those very soon. But that's why. But I think I don't think we purposefully take a cavalier view to delivering audited accounts. It's just a function of where we have come from in terms of our resources and the changing environment of the audit profession.
Thank you very much.
Thanks, Nick. David, Nick, I'm kind of conscious of time. We're just coming up to the hour mark, and you have answered pretty much, well, the vast majority of the questions that we've had through, and address the ones I think you can for now. But do please continue to submit your questions through. The company will review all the questions and they'll publish those back on the Investor Meet Company platform. David, perhaps I could just ask you just in a couple of words just to wrap up before I redirect investors for feedback, please.
Okay. Well, so thanks again for joining us. Thanks for the good questions. And we tried to answer the difficult questions as well as the easy ones. Hopefully you can see we are in the sweetest sweet spots, industry environment right now and market environment. And hopefully you can see that we are structuring ourselves to financially benefit from that as well as we can, whilst building a business that's going to endure for the long term and carry on making all stakeholders a very good return. So I hope you can see that, and I hope you attempt to join us on the journey. We're very excited, and I hope you will be excited too as we go along. Thanks very much.
Thank you.
That's great. Thank you, David. Thank you, Nick, for updating investors today. Could I ask investors not to close the session, as you will be automatically redirected for the opportunity to provide your feedback. As soon as the webinar ends, take just a couple of seconds to pop up in front of you. If you've accessed the meeting from our website, the feedback page will appear in front of you. If you've accessed it from the link in the email, you'll be asked to log in to submit your feedback before doing so. So on behalf of BYOTROL PLC and Investor Meet Company, we'd like to thank you again for attending today's presentation. That concludes today's event. Thank you indeed. Thanks, David and Nick.
Thanks very much.